Okay, we're checking out another video by TD Ameritrade Network. Don't forget to subscribe to the channel, guys. We hit 100 subs. That's great. We hit 100 subs. That was amazing. Thank you guys for that. We're at 111 now, I think. So thank you everyone that subscribed. Don't forget to leave comments, to like the video, share it. That all helps out. We're trying to hit 1,000 subscribers is the big goal. Get this channel monetized as soon as possible. But let's check out this video.
Welcome back to the watch list. Want to talk all about
miles
Tesla,
ahead of the EV
market.
competition.
These stocks have been hot, right? Now what? Our midday panel is ready. Andrew Graham, CEO, Jackson Square Capital, and Doug Astrop, Managing Partner, Exponential Investment Partners. So when you look at these record deliveries, Tesla's second quarter deliveries topped expectations. Andrew, I'll start with you. How are we doing in the world of EV deliveries? What's your interpretation and outlook?
So I don't think too many people care about the long-term earnings power, excuse me, of Tesla. I think the deliveries, the fact that they were strong, puts upside pressure on the stock in the near term. So I would look for that in the short term.
I see. Okay, but overall, you were pleased with the deliveries
of course.
From the company, Andrew?
They're record-breaking. What are you talking about?
Yeah, absolutely.
Yeah.
I think, again, it's a short-term move in the stock. The long-term, excuse me, doesn't look quite as compelling.
This guy's like really struggling, man. He's got something in his throat and he's on air. He's really nervous. He's trying to keep it together. I feel for this guy. So yeah, I don't know what he means by long-term. It doesn't seem very compelling, but yeah, they're just going to keep making more. They're going to keep selling more cars. They're going to keep making more factories and selling more cars, and new cars are going to come out. The Cybertruck's coming out pretty soon. The compact, the smaller Model Y, which is like the Model 2, is coming out. Just going to keep going up and up. So their solar, their energy business, the insurance, the Tesla insurance, nobody's talking about. Sleeper over there. So we'll see.
Okay, let's leave it there. And I'll be right back. Doug, your thoughts on what you're seeing from Tesla and the fundamentals there?
Yeah, fundamentally, it's a great business. They've got a great margin, 18% operating margin, 25% return on capital. And that operating margin's like 2 or 3 times what the Detroit companies earn. So from that point of view, it's a great business. They have a great balance sheet. But it does feel like you're kind of chasing a hot stock here. It's doubled year to date, and it sells for 75 times forward earnings. So it's tough to really jump in here. It's kind of priced for perfection and not much of a margin of safety to protect you.
So in the meantime, dealer inventory of EVs has grown to record levels, but I will say the pace of EV sales growth fell from the first half of the year compared to last year when sales were growing. There's still a big demand for EVs, right? Andrew, when you look at this, you have Ford and GM and, people are getting on board. The EV outlook?
Yep. So it's very positive, very strong. Tesla made those deliveries at the expense of margins. So they cut prices 15% at the beginning of the year. But those deliveries show there's still good demand for their products. But honestly, it's a deteriorating fundamental case for Tesla when you're sacrificing margins for unit volume growth. And at the beginning of the year, earnings estimates for the stock were 34% higher, the consensus number was, and revenue numbers were 10% higher. And I don't think those are necessarily too low at this point. So again, the good point, Tesla up 130% year to date. If you look at the stock back, whatever it was, 2 weeks ago, when the Twitter news broke that Ford owners are going to have access to Tesla supercharging stations, the stock went up 6%, which is the entire market cap of Ford, by the way, which is kind of surprising. So I actually think these agreements with Ford and GM might be negative for Tesla. The charging stations were a moat for Tesla. Tesla owners knew that. They had access to those charging stations. And Tesla makes very little money on it. I mean, I think Musk and some others in the company have said 30% gross margins, 10% net margins, but that's really aggressive. If you look at a gas station, for example, and I know they're not necessarily comparable, but to me, it feels like exchanging that business, like that's going to be the business going forward, is like picking up pennies in front of a steamroller. And it just, at some point, the valuation will matter. It's not today. Stock goes higher, at least all things equal, notwithstanding the market. It should be biased higher in the near term on those deliveries, but ultimately it's going to come down to valuation.
Okay, so yeah, he is right about the supercharging not meaning much in terms of like profit and stuff. It's not that big a deal. But Tesla's goal isn't like only just to make profit. It's to help the world transition to renewable energy. Like that's the main goal of Tesla. So they're trying to help in any way possible make that happen. So a lot of people miss that, and then a lot of these analysts can't grasp the fact that Tesla just wants to help. Like Elon just wants to help the planet. They can't wrap their head around that. They just see numbers. But I know it's hard to believe for a lot of people, but they are just trying to transition the world to more renewable energies, even if, you know, it hurts them a bit in the short term. And also, they don't have access to all the superchargers. It's only about half the superchargers they have access to. I think it was something like 1,200 superchargers, but so that's about half of the current, the amount that they have. So it's not all of them, which gets overlooked every time I watch one of these videos. No one is talking about that. It's not all the superchargers. It's about half the superchargers that he's opening up. Tesla's opening up to the other automakers, and the other half is strictly Tesla. So there's still a moat there if you want to, you know, look at it that way. But Tesla still has a moat there, but it's not that important, and it helps the transition, speed up the transition even more. And in terms of like, he doesn't see this being a positive with Tesla has to drop margins to sell more cars. He thinks that's like in the long run, that's not a good business model, but Tesla has the power to drop and raise their pricing just from the website really easily to keep up with demand. If there's too many cars, they're building too many cars, and they just lower the price, and then they could sell them all. If they don't have enough, if there's too much demand, the wait list is 3 months, 6 months long, then they could raise the price so less people get them, and then they could keep up with it. So that's what they've done. They've done that since the beginning. They don't want these crazy long wait times. They'd prefer you order your car and you get it the next week. Like, that's ideal. So I think this is all being blown out of proportion, but again, we're going to have to wait and see, but I'm confident that they can sell every car they make no matter what.
So from superchargers to gigafactories, all kinds of factories all over the place, stiff competition, but a growing demand going forward, most likely. Doug, is Tesla a buy? Or the other names a buy?
Well, I completely agree with Andrew on that, that, you know, the valuation's going to matter at some point, and buying it at 75 times forward earnings is really tough. It's a hot stock. You feel like you're chasing this euphoria. And so we would wait for a better entry point. It's definitely a great company, but tough to buy at these levels. It's sort of priced for perfection. And if there's one modicum of bad news comes out, it'll get hit pretty hard from this level.
So these guys are obviously like, they're short-term investors. It seems like they think about, you know, oh no, it can't go any higher. But I'm in it for the long term, 5, 10, 15 years from now. I'm thinking like this is cheap. If you look at 5, 15 years, 20 years down the line, when robo-taxis are running around, when Tesla bots are running around, like doing stuff, like this is going to seem like nothing. But a lot of these guys, when they say this stuff, it's about next month or next year. Even to them, next year is long term. So their vision of what's going on is very short-sighted, and they're seeing Tesla as just a car company. Like they don't even they're not even looking at the potential of the AI business, of the energy business, of all Tesla insurance. There's so many things they could do and that they will do from now in 10, 20 years from now, right? There's so many different things that they're going to do that they are doing now. Their energy business is supposed to be just as big as the car business, which is ramping as well. The robo-taxi is going to go crazy. Like so a lot of these guys, again, are very short-term sighted. And
Andrew, you have a name that you like, or the group the names that seem to be the leaders to you?
Yeah, so the news today about the price cutting detente in China is sort of interesting because the Chinese automakers are ascendant. They are delivering improved quality design and tech, and I think it's a lot easier probably to buy the auto suppliers. So that would be Magna and others, Goodyear Tire. So I would focus in on those suppliers. It doesn't really matter how much you're making on the vehicle or margins. They're going to have to fill it with these parts. And so I would look to buy that. And Magna has a nice 3% dividend yield. So China is going to be expanding globally, and they're doing it in Europe now, and they have the eye on the U.S. as well. It's bad news for GM, Ford, and Tesla.
Yeah, I mean, the China story, obviously we think China is going to be expanding. There has been some slower growth, and that has dampened things, whether not just EVs, but pretty much a lot of things, because China is such a key player for success. A final thought here, Doug, on the group overall.
Yeah, just on Tesla, we would definitely focus on Tesla if you want to play this space. They're the clear leader. They have a great first mover advantage, and they're doing everything right operationally. But we would just wait for a better valuation to start nibbling at the stock. It's a little pricey here.
Yeah, thank you both so very much. A great conversation. Appreciate it. Andrew Gray.
All right, so this guy's saying just wait for a better entry, and the other guy's saying to invest in the suppliers of parts for cars. So yeah, again, the guy on the right or on this side here sees Tesla as just the car company, nothing more. No mention of the AI, no mention of the energy business. This guy's a little bit more optimistic, the guy over there. But I still think he thinks it's just the car company and to come in at a better entry point. Very interesting to see different people's perspective of Tesla. Very short-sighted in my opinion, but yeah, we're gonna see where all this stuff lands in the future. If we're right, if I'm right about it, or if Tesla's a busted growth story and it's gonna come crashing down. Guys, don't forget to like and subscribe to the channel. It's a brand new channel, so like the video, leave a comment, subscribe to the channel, and come back every day for more daily Tesla videos. All right, I'll see you next time.